This is Nandakumar from Ashanka Institute of Technology in CSE B section. Today my Tech Talk presentation WPM subject is about the elementary costs. Elementary cost is nothing but the elements of cost means nothing but the which have to note that the elementary cost means in a management of economics or in the economic subject we have the different types of costs according to their management and product activity. We have to know divided into cost can be classified into variable cost or overhead cost, or variable cost or varies with the volume of the production, while overhead cost is fixed irrespective of the production of the volume. Variable cost can be further classified into direct material cost. Variable cost can be classified into direct cost, direct labor cost, direct expense. The overhead that can be classified into factory overhead, administrative overhead, and the selling overhead and the distribution overhead. Means that the product a direct material cost, those cost is amount of wages paid to the direct labor involved in the production activity where most of the numbers are involved in the production activity, labor activities. Direct expenses are those expenses that are very relation between the production value other than the direct material cost. In this direct material cost, direct labor cost, overhead is aggregated. If direct material, indirect labor or cost, indirect expense, administrative overhead includes all the costs are included that administrating the business, selling overhead, that expenses that is incurred in the promotional activities, and the expense relations to flows, distribution overhead is the total cost of shipping the items from the factory site to the greatest style. In this greatest style, we have different types of styles of the cost. We have to quote that according to their product activity. The selling price of a product is given that direct material cost plus direct labor cost plus direct expensive is the prime cost. Prime cost means the addition of direct material cost, direct labor cost, direct expensive. And the next one is factory cost, means prime cost plus factory overhead. And the next one, cost of production, C, is factory cost plus office and administrative overhead. And the D is the cost of goods sold, cost of production and opening finished stock, closing minus finished stock, and cost of goods sold, selling, the distribution overhead, cost of sales, and the cost of sales plus profit. And the selling price per unit is sales and quantity of sold. And the above calculation, we opening the finished stock is equal to the opening closing finished stock. Then that we know the other costs and revenues of that. This is that marginal cost of a product is the most producing in additional unit of product is let the cost of producing 20 units of the 1000 per and main costing 21 of the same product is 45. The marginal cost of the producing 21st unit is 45 rupees. Marginal revenue is nothing but the product incremental revenue of the selling an additional unit of product. Let that the revenue of the selling 20 units of a product 1500 and revenue selling 21 units of the same product we the 15,18,5 and the marginal revenue of selling is 21 rupees. And thus this is sunk cost. This is known as cost equipment asset. Let assume that equipment we purchased 1 lakh for the 3 years back. If it is considered as replacement of the present 1 lakh instead of present marketing value, can be ticketed that as the present value of this equipment for other analysis. So the purchase value is equipment in the past known as sunk cost. The sunk cost should not be considered for any analysis done for above words. And opportunity cost. In opportunity cost, we have to know that the alternative and X is selected, that we have to this X and worth. Consider as person has 50,000 rupees in share and let the expected manual income that and 7,500 if 18% of pay return and the 9,000 1,500 rupees in the bank. Opportunity has stopped conversing in. Thank you for giving this great opportunity. Have a nice day.